Hi, everybody. Happy Tuesday morning. Welcome on into your FreightWaves Now Community Spotlight. Hopefully you are rested after your long Labor Day holiday weekend. We're back again on your Tuesday morning with another edition of our Check Call Community Spotlight. We've got Mary O'Connell here talking all things 3PL. Mary, what did you do with your long weekend? Did you get some nice relaxed time?
I did get some nice relaxed time. However, it was not as fun and vacation-y of a Labor Day weekend. I helped some friends move and kind of just hung out and played some games.
There you go. Sometimes that's all you need. But we are back in action once again, and we've got another episode of Check Call coming out this afternoon. Today, we are back with Paul Brashear from ITS Logistics, talking a little bit of a zoom in on what's going on with the port rail situation on the West Coast. Of course, where kind of everything starts when it comes to trucking changes for us. Talk to us a little bit about what they're seeing.
So, unfortunately, the West Coast is kind of that leading indicator for what can happen in the freight market. As we all kind of have heard over the summer through many states of freight and many market analysis, all eyes are always on Long Beach and the ports of Long Beach and LA. But really, it was so they ITS Logistics puts out this kind of rail container and maritime index that comes out, and the West Coast was pretty unanimously rated as pretty severe for congestion or disruptions or possible issues. So a lot of that is alleviated by obviously the Canadian rail strike that never happened, because it happened for what, 10 hours. um the That was a huge indicator, because obviously if the Canadian rail strike happened, then a lot of those goods would have to be diverted down to the US, and then there would just be kind of a bit of chaos, and that's not something that we particularly need in our lives right now. So that being said, there is still, we are coming up on retail's peak season. And while there are some mixed reports on what to expect for retail peak season, some are saying consumers are going to be shopping more and spending more. Others are saying that they're going to be shopping earlier. So retailers need to be prepared and pull forward some of their freight to kind of start stocking those shelves ahead of time. And I think as a result, we're starting to see that happen. We're starting to see that kind of influx of imports from Asia, or honestly anywhere that goes to the West Coast. I think we're starting to see that rise in import levels. I mean, all eyes are on Labor Day weekend, which we just had. So it's going to be an interesting next week and a half to see if that freight market has finally turned around for the better, obviously for carriers and everything like that.
I'd argue that some folks in the space like a little bit of chaos, right? But it's like well-seasoned chaos. You don't want the chaos that comes from like a port strike or a work stoppage, but maybe you want the chaos that comes with like an outside event, like an anomaly event that drives rates up for just a little bit. Not to the point like what we saw during COVID with a lasting whiplash effect, but maybe just a little bit of interestingness to kind of round out the end of the year. And as we've heard from other folks in our community space, Mike Bowden Distal particularly, the rails are just kind of existing right now, right? Like every form of transportation is just kind of existing. Rates are kind of just there. Trucking rates are still just kind of there. But what do we think it's going to take before we start to see some maybe real cohesion in a positive direction for both the rails and for trucking movements?
I mean, it's definitely there's a lot of factors that could influence it. I mean, everybody's right. We're all just kind of chilling. Like everyone's kind of chilling, not making anything crazy, just making sure that they can protect that bottom line and make sure that they can still report a positive gain for the year, because no one really wants to, say, well, we didn't make enough money this year. That's not really high on anyone's to-do list. So I think everyone is just kind of maintaining, and there's a lot of factors that could happen. Obviously, I'm not going to be one to root for a hurricane to come and disrupt the freight market, but some people are. Those are those little chaos people. On the other hand, I like a predictable chaos. I like knowing that retail peak season is coming. I like knowing that that's probably going to increase spot rates, add some volatility to the market, and I like living in that land of things. But for the most part, I think, you know, we're all just kind of existing. There's a lot of hope on 2025. I think that we probably won't see any shakeups until whatever happens with the presidential election in December or in November. I think we're all just kind of in a holding pattern because depending on how that goes down will depend on a lot, honestly.
Yeah, it's all just kind of like a if this happens situation, right? It's all just a big old game of ifs. The other thing that you guys talk about today in your episode is spot rates, particularly on the ocean from Asia to the West Coast. And we know that the container rates have really kind of taken a pretty big jump from the floor that we've seen them at for the last like 18 months or so. What do we think is pretty much the cause of that? And is this a sign of life, or is this something that could be like a false hope that people really don't need to hold on to?
I think it's I think it's a sign of hope, but not in the way that we think it is. Obviously, there are some port renovations happening at very large ports in China, so that is really kind of contributing to the increase of those rates. And then there's some other factors happening, but I don't think that I think that that is like it's increasing the cost of shipping what like 10 times its normal rate. So obviously that is something that is going to well, it's factors that are happening in Asia as a result of those ports. It's something that, shippers and consumers are ultimately going to be affected by here. And so, why it is more expensive to ship things internationally, I think it's really just going to make more of a case for the rise of that nearshoring. So, I think, and also a lot of those things that have been brought back over to the North America through Mexico, I think those are starting to come online now. So, I think honestly, just the Southwest is really poised to take off in a big way, kind of come the turn of the year. So I think that it's going to be very interesting as we sit and watch and see what happens.
And it's going to be interesting as we sit and watch. And speaking of sitting and watching, if people want to sit and watch today's check call, where can they go to do that?
If you want to, you can just keep sitting and watching here on YouTube. The new episode will come out today at 12:30 Eastern, and then if that's not enough news for you, we also have the newsletter that you can subscribe to on freightwaves.com/checkcall.
There you go. All right, Mary, thank you so much for joining us. Hopefully, you had a great and relaxing long weekend. We'll see you on our next edition of Check Call.
Thanks, guys. See you later.